Hi everybody, I'm Fima, research analyst for Action Alerts Plus, filling in for Catherine Ross. I'm here live from the NYSE with Jeff Marks, senior portfolio analyst for the Trust. Jim is out today. Jeff, let's jump right into it. This morning, big headline, UK's Prime Minister Theresa May announced that she will be resigning on June 7th. What's one thing that the street needs to look for in her successor?
You know, it's actually funny. Her that resignation, just what's going on over there overseas, it actually made me feel a little bit better about our own kind of political situation that's going on here. But I would say here is what I would say is that if you're looking to invest, right? There's a lot of different options you can go to: United States, emerging markets, things like that. I'm going to take a page out of the Jack Bogle playbook and say that
Jeff is from Vanguard, by the way.
I used to work there. Yes, but I would say that if you're looking for a country to invest in, why not invest in the United States? And I'm not just saying that just because. If you look at how our markets are structured, it's the most transparent. It has some of the best. It's deregulated in the right areas, regulated in the right areas. If you're looking for that global diversification, a lot of U.S. companies, the biggest ones, they all have that multinational exposure. So you're going to get that exposure to international regions anyway. So you are diversified there. You're not going to really have too much dollar risk as compared to like investing in emerging markets. So, while what's going over there may be, there's just a lot of chaotic and uncertainty. And, we have our own uncertainty over here. But I still think the United States is, over the longer term is the right place to put your money.
No, I couldn't agree more. And one of the things that I find really interesting is even with President Trump's, intense trade rhetoric that's been happening and stuff, our macroeconomic backdrop seems a lot more favorable than places in Europe, China. And if we do get a deal, then that's kind of like an embedded call option, just to the just more room to the upside for the deal. So I couldn't agree more. I mean, I think the U.S. is the place to be, and uncertainty in the U.K. has just increased, Europe overall. So Jeff, let's bring it back home real quick. Wall Street's rallying. I'm looking at the S&P right now. It's up 0.5%, but Foot Locker reported earnings this morning, and last we checked, that stock was down double digits, missed analyst expectations, trimmed guidance on China tariffs. So, what's kind of the takeaway from the release? What do we need to know?
Yeah, so as you mentioned, it was a top and bottom line miss. Comps increased 4.6%, but not good enough.
We were looking for over 5.
Yeah, the 4.6% is not good enough when you're looking for 5. Stock's down heavily today. I want to say, last time I checked, mid to double digits. So to me, it's almost like the numbers don't look as bad as compared to some other retailers that have reported, but obviously it's heavy to the downside. But what I would add is, we still have to see kind of how tariffs come into play there. So one thing I'm looking for is if you have tariff affecting a lot of shoe companies, say like Nike, for example, if they're either going to be forced to eat the costs or raise prices. If they raise prices, I might be less inclined to shop at a Foot Locker. So that's one thing that you want to keep an eye on. And there's going to be a lot of coverage all day. I haven't seen the conference call yet, but I've been talking to Kevin Curran over at Real Money, so I know he's close on the trail there. So more to come.
Right. And since you did mention it, let me just say real quick: Foot Locker is Real Money stock of the day. Kevin Curran's been covering it from every different angle. I know he's digging into the online was one other thing.
Yeah, I do want to add one thing real quick is that there is this bifurcation going on right now in retail that if you're a retailer and you can mitigate the tariff impacts and you can keep customers in your stores, you're going to win, and that's Target. Whereas on the other hand, if tariffs are going to impact your business and you might be struggling to maintain those consistent comps quarter over quarter, you're going to get hit, and that's what you're seeing today.
All right, so those are the three things for, we've got some more retail coming next week. I mean, if three things that investors need to keep an eye on, would it be, you'd say China?
Yeah, so it would be tariffs. So we have some companies reporting. Abercrombie's going to report next week. One thing I'm looking over there is if they can continue momentum at Hollister. We're going to also hear from Dick's Sporting Goods. That might be a weather story. We've saw weather impact a lot of retailers already this earnings season. That might also come into play too. And another one I got my eye on is Dollar Tree. Now, Dollar Tree is interesting because when they reported and they gave their 2019 guidance, management already incorporated the first bucket of the 25% tariffs.
So we're not looking at $1.50 Tree, as Jim
No,
said.
Exactly. So that's because, it's a good point you mentioned that, because their CEO has been pretty committed to not being hostage to one region, not being hostage to China when it comes to sourcing. So that's already in guidance. So now we just have to see if there's anything incremental.
Right, and that's really what Jim was saying, is now with the earnings coming, we're really starting to see those retailers, the ones that did shift the supply chain and the ones that didn't.
Yeah,
so
it's the
that is-
bifurcation, exactly.
Right. All right. Thanks, Jeff. That's all the time we have for today. For all of you watching on TheStreet.com and Facebook, we're now jumping over to our Action Alerts Plus members-only club video. But before we go, we need to really quickly mention that for Action Alerts Plus, if you haven't joined the club already, there is a Memorial Day weekend sale. Memberships are available for a discount, and there's a special 3-month trial offer if you want to try us out.
Yep,
All right,
it's a good time to get in. We have our monthly call, which we do every month, exclusive to club members. It's going to be in early June, so it's a good time to join.
No,
Got to know what's
absolutely.
the latest pulse on the market.
Especially heading into G20 and the June meeting with Trump and Xi. All right, guys, I'm Fima. We're going to take it over to Action Alerts Plus. Have a great weekend.